Hello everybody and welcome. James Helliwell here of the Lex van Dam Trading Academy. In today's video I'll be showing you how we apply our checklist process to risk analysis and how you can gain a tradable edge through this information in under 5 minutes of scanning through the checklist that we provide at the club. So let's begin with a recap of the examples that we saw previously applied to the market risk checklist. So beginning with a very positive score of +3, you can see the effect that this had in the trading relationship between the risk pair of financials versus the safety leg of utilities. So as the market risk indicator turned positive, it suggested that we should be seeking to take risk and therefore buying the ratio of financials versus utilities. So you can see what happened the last time we had a strong signal here. And of course, we've had many others since, fluctuating, but this was a particularly clear one for this particular pair. And you can express the risk score with a number of different instruments. We just happen to be using this as an example. And then to an example of an extremely negative score, in fact, a maximum negative reading of -4, which occurred in late 2011. And you can see here that this marked the peak in the trading relationship between the riskier small cap stocks of the Russell 2000 compared to the safer large cap names of the S&P 500. So as the ratio was rising, small caps were outperforming large, and generally speaking, the Russell was outperforming the S&P 500. And as it declined, or began to decline, small cap names underperformed the safety trade of the larger cap stocks in the S&P 500. So this was a very, very strong score, and it marked a significant turning point, which really accelerated within a couple of months of this score being triggered. So now we know why we look at this and why it's important and valuable to have this as part of your trading arsenal. Let's go through each of the factors on this checklist in a little bit more detail, as we do in the club each week. So beginning with monthly indicators. So there are 4 factors, and the top one, we look at monthly indicators. Easiest way to introduce this is by pulling it up on screen and showing you that basically we look at 1, 2, 3, 4, 5, 6, 7 different indicators in total. And this particular component is taken from the weekly report, which all of our trading club members have access to, which is updated every Monday. And what we're looking to do here is first of all identify what the overall picture is. So do we see more green or more red on here? More improvement or more deterioration? And we actually see slight positive of +1. So we have 4 greens and 3 reds. It's slightly positive on balance. You can see the last reported numbers and the 52-week range if you want a little bit more detail. You can see for many of these, interestingly, they are towards a 52-week high or 52-week extremes. And you can see also some useful information about the next reported date where it's applicable. Just excuse that one. And yeah, you can keep an eye on these as they're released throughout the coming months. This is to prepare you as much as present what's going on month to month. So we actually this month see, because it's only a reading a net score of 1 on this scorecard, we consider this to be a slight positive. If it was, say, +3 or +4, that would be definitely a full mark on here. However, it's around neutral but slightly positive, so we award it a half mark positive, 0.5. And that's improved over the previous month, which our trading club members were around for. So now on to the next component, the short-term indicators. And these are comprised of many market-based indices and other things. And it looks at, for example, commodity prices. You've also got some economic surprise measures in there for Europe and the US. Look at things like initial jobless claims, the labour market, also the consumer in terms of consumer comfort or confidence. And then other things relating to basically the manufacturing sector. So steel utilization, so capacity, factory capacity. Intermodal car loads, so that's freight and distribution related to cargo volumes, and then also financial gauge of bank credit, so liquidity in the system. And it's unusual to see that one turn negative at any point. So that's often green as it is. This month, it's often increasing. So again, what we're going to do here, quick glance down, we can see that overall, slightly more red, one more red than green. So on the month, the shorter-term economic data have deteriorated slightly. We can look again towards what the current or the previous level was, and where we sit currently in the 52-week relative to the 52-week range. So the lows on the left, the highs on the right, and you can pick out